Good afternoon, everybody, and welcome to the Fintech Nexus weekly news show. My name is Peter Renton, chairman and co-founder of Fintech Nexus, joined as always by my good friend and colleague, Todd Anderson. How are you doing, Todd?
I'm well, Peter. How are you?
Doing great. I see you in our New York studios. That's great to see.
I am.
And also, I believe in New York, Nicole Casperson, our special guest today, first time on the show. How are you doing, Nicole?
Hello, doing very well. Excited for it to almost be Friday. Why do I feel like it's already Friday night? I don't know. I've got a glass of wine on my mind, but
well, it's funny because after we record this show, I always feel like the weekend's almost here. That's how it feels like to me.
Oh,
so anyway, before we get going, Nicole, why don't you introduce yourself to the audience? Just give a 30-second quick summary.
Of course, yes. I'm Nicole. I am the founder of Fintech is Fem. It is a media platform where I elevate very human-centric companies and leaders in fintech who are basically building to make the financial system work better for everyone. Essentially, I have a podcast called Humans of Fintech, interviewing a lot of the folks that probably listen and watch this show. And I host events throughout the year where I bring the women in fintech community together.
Okay, great. Well, let's get right into it because there's a lot to cover. As always, in fintech, it's always busy. So, first up, we're going to go talk about Stripe because they came out with news early today that they may be going public in the next 12 months. A little bit of a surprise because no one's going public right now. But if anyone can buck a trend, it could probably be Stripe. They have hired bankers, apparently, Goldman and JP Morgan. And, they've said it like when you read, I got the alert and you think, oh, wow, they're going public. But then you actually read the article. It's sort of like, we might go public, we might do a private transaction. They've got a lot of employees who are, probably holding a decent amount of stock at a decent amount of money, and they want some liquidity because everyone expected they would have been public by now, but they haven't been. So, what do you think, Todd?
Well, this is the one company that I hope does well in a public offering in an IPO. My guess would be later on in 23, and hopefully that kind of opens the floodgates and kind of eases everyone's minds a bit in fintech, because I think right now is a pretty tumultuous time with layoffs happening and valuations plummeting and a lot of unease in the industry. And I think a good Stripe event I think can go a long way for broader fintech. And so my hope is that it goes quite well. And obviously for those employees that have options and hopefully they get to cash out at a nice valuation. But overall, I think it can have a real boom for the overall fintech industry. And I hope that is the case when they do go public.
A Stripe IPO could be almost like bring the industry together and almost this like rallying cry, like things are going to be okay. Look at Stripe.
We need that, don't we?
Yeah, I mean, we clearly do at this point. Although I feel like I'm a little traumatized is a little dramatic to say, but when it comes to going public with fintech companies, because we saw so many, the SPAC era. Do we remember? Not that long ago.
Oh my God.
I mean, very different, but still, there was that SPAC time when it felt like everyone was going public, and it was like this magical time when anyone could do it, right? And a lot of those did not pan out. So when Stripe says in the next 12 months, I'm inherently skeptical because I'm like, okay, well, that could mean something. It could mean nothing as well.
Well, that's the thing.
Like, who's going to hold them to the 12-month timeline?
Yeah, no one.
Right. The media will.
Well,
the reporter's knocking on their door that's like, all right, Stripe, it's been 6 months. Are we getting to that goal? Seriously. Yeah.
Well, I mean, they have hired bankers, so that's that they are going to be spending money. They've got retainers, I'm sure, and they have to pay. So they're not doing it just willy-nilly. But one thing, SPACs. Is there any fintech SPAC that is down less than 75%? I mean, that's I
not off the top of my head.
I can't think of one. They're all down dramatically. Most fintechs are down from their IPO dramatically. But if anyone can pull us out of this, I mean, this Stripe, it's possible. And of course, even if it's a private value, even if it's a private transaction, that's not a public offering, like not an IPO, we'll still find the price, and that will be a bellwether for all of fintech. If Stripe can maintain that, 50, 60 billion, they're at 63 right now is what they, I think, last valued at. If they can maintain anything over 50, I think that's going to be a great thing for the industry. So fingers crossed.
Yeah.
All right.
We want to see the win.
We do. Okay. Moving on to another really big story this week. And this was, I think it came out Monday, many of the big banks, JP Morgan, Wells Fargo, Bank of America, and 4 other large banks, they're creating a digital wallet. They're jealous of Apple and they're jealous of PayPal, and they want their own. They want these people to sort of come back to use a digital wallet that they control. Also, I think the thing that's interesting about this, because I mean, let's face it, these banks all are massive credit card issuers, and there must be millions, tens of millions of their cards in Apple wallets right now, in PayPal wallets for that matter. But I think this is a big play on the pay by bank account thing, which is, I think this is something that's a brand new thing. It's been going in Australia for 20 years. It's in England, as in UK as well, where pay by bank account is really a popular way to pay. And if it comes to this country, that's they want a way to kind of keep control of that, because they're going to be losing out as well if there's no credit card transactions there. So, what do you think, Todd?
I think the card part is, to me, the more interesting element, at least today. I don't know how it works unless they cut off access to Apple Pay and others, because most people, I'm myself included, that use Apple Pay, it's just using my bank card through Apple Pay.
Right.
And so is that gonna happen where Apple Pay is now no longer accepting, Chase in my instance, that I have to go to this new Zelle wallet or whatever they end up calling it, and that way it's that now I have to use it through that functionality? Or is they're going to come out with some integration or partnership with Apple, and how's that going to work? I think the pay by bank account is interesting, and if that's the play, I think more people will take that up eventually. But ultimately, we're a card-based consumer,
Right.
and whether it's a digital or virtual card, that's how a lot of people pay for stuff in the States here. So I just don't see it being as successful unless they cut off access. And as Ron Shevlin said, are they really jealous of PayPal in them?
I mean, Todd, I think you brought up a good point with the friction point that can potentially happen there, right? Like, if I use my Apple Pay for absolutely everything. I wrote about it for my newsletter that's coming out tonight, where I feel like such a boss now that I can literally just tap my phone when I walk through the MTA entrance. Like that's like a big fintech win for me. And I think about it like as a fintech nerd, every time I do it, I'm just like, yes, oh my gosh. Like, to think just a few years, like this happened in 2020, just a few years ago, I wasn't allowed to do that. And to the idea of like having to possibly have another Zelle wallet or like download something else or do something to change that amazing experience that I have right now, I don't love it. I don't love the idea of having to do that. And I think that can be difficult widely for consumers, to think of it like that. But solid point.
They're going to have to have a hook. They're going to have to have a hook to get people to use it, because Apple Pay, if you got an Android phone, Google Pay, they're entrenched. Why would you use another wallet? There's going to have to be a reason.
Everyone's going to think their iPhone is broken if it doesn't work, and then like, oh, that's right, I have to go to my Zelle Pay wallet, whatever they call it.
And I don't see Apple. Could they really take away Chase's cards from Apple Wallet? That would.
I don't know. It's just so many things I see as a potential problem here. It's just, I don't know. Some of this just doesn't make sense.
Yeah. Well, I think the banks want to do something, and they're going to have to be patient. I don't know if they can really be patient as much, because it's going to take a while. It's going to take a while to come up and really get any traction against Apple Pay.
I'm definitely not giving up my iPhone or Mac for this possibility.
That's fair.
Don't even dare to think looking at Samsung.
Right. Yes. I've been an iPhone user from literally day one. I bought my first iPhone on the day it came out. and have never looked back. Anyway, let's move on. We're going to have a story about FTX again. We've went for several weeks without FTX stories, but this one is about federal prosecutors seizing assets. They've seized $50 million from Farmington State Bank. This is that really weird bank that that Alameda Research invested in at a ridiculous valuation back in, I think we talked about it on the show probably a year ago, not quite a year
something
ago,
like
probably. But anyway, they've got FTX bank accounts at there, and so the federal prosecutors have gone to seize the assets of the FTX bank account. Same with Silvergate. It's a total of 150 million each, and then they have also received $55 million of Robinhood shares, 55 million Robinhood shares, which FTX, which Sam Bankman-Fried bought personally. So it's their assets are coming out of the woodwork, and there's going to be some money for the FTX customers, it seems.
Well, you hope so, at least. I think we saw that story. What was it earlier? Maybe it was last week at this point, that the current appointed CEO said everything was on the table, including restarting the FTX exchange to help make customers as whole as possible. I mean, if I was a bank thinking about getting into crypto, I mean, this type of story would scare me more than I'm already scared, because you're dealing with an FTX that evaporated and was total fraud. Now you have the government coming in and seizing assets. I mean, it's really looking like the partnership with crypto is not paying off for banks. And the whole Elizabeth Warren stuff about she's happy about the custody stuff with banks as well. And so I think banks getting into crypto, while many are doing interesting things, I think a lot of banks that are outside the top 15, 20 banks are probably getting even more scared than they were of playing in that space.
Yeah. In this case, it's worth being patient, right? In
Yeah.
seeing the fallout, right? Like, this is still very fresh, and we're still uncovering new things that have gone on in this case. And so you want to, if anyone wants to, dabble into crypto, or, and kind of almost like it's risky, right? With your business model, it's probably worth waiting it out, seeing what's going on. And to your point, Todd, there are other innovations and disruptions to be made. So maybe just keeping your eye on those other things until kind of the dust settles, or if, the crypto narrative, which I would like to see, kind of just evolve
Right.
so much more beyond FTX and what has happened here.
Yeah, and it's going to take some time for that to do that, because they're still, the headlines are still happening. But before we move on, I got to give a shout out. Our CEO is watching here. There we go.
Hi, Bo.
He likes he likes your point about the Apple Pay user experience versus Zelle. So
I'm with you, Bo. Don't you take my Apple Pay experience.
Okay, so let's move on. We're actually going to go back and talk about Stripe, but this one is about Stripe and Amazon. This was interesting because Amazon have been using Stripe for a while, and vice versa. Stripe uses AWS, I think exclusively as their cloud provider, and they've been partnering since 2017. Stripe has been processing payments on Amazon since 2017 for a lot of Amazon's businesses. This is probably a monstrous part of of Stripe's revenue. This is one of the juicy things. I think if Stripe goes public, we get to find out more information about this sort of stuff, because we don't know. Only the insiders know what this sort of deal means in actuality. But Amazon's one of the biggest retailers on the planet, and if most of the payments are being processed through Stripe, that's got to be a big deal. And it sounds like they're going to significantly expand this partnership now.
Yeah, I wonder if it's a coincidence that I believe this story was first.
Yes, it was.
And then the story coming out today, I think it was early this morning, about the news about them going public sometime in the next year. Clearly, I mean, Stripe is just a dominant force in payments, and furthering a partnership with Amazon. How is that not a huge win for Stripe? And I'm with you, Peter. Once they do file eventually, seeing what some of these partnerships actually give Stripe in terms of revenue and everything else, That's where the juicy details are.
Yeah.
Yeah, I think there's also an interesting connection with big tech leaning more on a fintech company, right?
Yeah.
Leaning more
That's
on
a good point.
on a Stripe, right? Even despite the layoffs and the kind of turmoil that's going on, we're still seeing a company like Amazon be like, all right, well, we're gonna double down here, so maybe that we can. That's like a little win too, right? It's like
Right.
maybe that's something to be hopeful about. They bank Amazon and an IPO. We might be seeing some happy headlines again, guys.
Yes.
Right?
Yes.
Might single-handedly save the fintech narrative here.
Right. Well, we're gonna have another happy headline here because another fintech came out of stealth this week. This is Foro, Foro. Never heard of them because they just came out of stealth. This was interesting because the former CEO and chairman of Bank of America is involved, and I'd never heard of this guy, to be honest. Hugh McColl Jr. He retired from B of A in 2001, so he is not a spring chicken. He is he's 80. I looked him up on Wikipedia. He is 87 years old, investing in fintech companies. I hope I'm
the next generation of fintech founders.
New gen.
I want to be investing in fintech companies when I'm 87. I think that'd be a great thing. But anyway, the CEO of Foro, deep experience in banking. He came from Zelle. Looks like he wasn't actually a founder. We're still learning a little bit. We don't know much about this company yet, but they are a business lender in the mid-market. They're doing business loans for 1 million to 25 million. I do like this area. I feel like there hasn't been a whole lot of fintech disruption yet here, and they are going to be going after that.
Hey, more help to the commercial side in fintech. The more, the better, because I think a lot of consumer problems have been solved by fintech, but I don't think a lot of, in this case, medium-sized businesses, but even small businesses, that their problems have been solved just yet. And so I think the more, the better in this space. And I have no idea whether or not this will work, but apparently it's not complicated, according to some of the quotes in the article. Connecting small businesses to money. I think the complicated part might be, getting them to pay that back, as we know. But the more, the better in this space.
Yep.
It would be interesting to see the almost like collective of banks that they are able to get on board for this. This is actually a pretty similar offering to Bridge by Citi, and one of their like fintech conglomerates within Citi. So it is something that's like kind of being done. I have yet to see it, be impactful or meaningful.
Right.
But what on Citi's side for them, and it's called Bridge, right? They are like literally being the bridge to small business owners and partnering them with banks that are offering loans for them. But they focus a lot on the community element and partnering these small to medium sized business owners with another bank who is also run by someone likely like in their community, whether it's women founders, or Black entrepreneurs and a Black owner of this community bank. And so I find that connectivity to be possibly pretty sticky for them. And so I'd be interested to see how this new fintech company Faro kind of has its own version of what that like differentiator is.
Right. And there is also I have a podcast coming out in, I think, like 10 days with Hum Capital, which is another fintech operating in this same space. So it's funny. The fintechs are starting to attack it. Obviously, you got the banks as well. So good news for business owners, that's for sure. Okay. We've got to sort of give Ron Shevlin, our good friend, hosted the show many times, give him a shout out for his regular weekly column on Forbes. Good to see him back to that normal cadence again. He talks about the new venture capitalists, community banks fueling the growth of fintech. And I think this is one of the stories that doesn't get enough actual traction in the press. You see that there's many community banks now that have teamed up. And there's Alloy Labs, there's BankTech Ventures, there's Jam FinTop, and they are basically taking money they have community banks and credit unions as their LPs, taking money from them and investing it in fintech companies, really. But fintech companies focused on the community bank credit union space. I think this is the way that the community banks are going to survive. The only way is they got to really lift their game with technology, and there's lots of companies that recognize that, and I think doing a good job.
Shameless plug. We did a similar session on this last year at the USA event. Very similar topic, not the exact topic, but similar topic. And you said it right at the end there, Peter. I mean, this is exactly how community banks thrive, and ultimately compete and kind of stay alongside fintech, because they don't have 14 billion like Chase does to spend on technology, and endless amounts of engineering talent to tap into. They need to be strategic, they need to be smart, and this allows them to get their foot in the door and probably have some say in kind of how these companies are ultimately developing, which could benefit their customer or their user base. And so super smart move by them.
Mm-hmm.
Yeah. Actually, thinking about the press and kind of the media attention angle, it could also advance that. In the last few years, there was a lot, the VC and fintech story, that kind of like matchmaking,
Right.
And then these huge valuations and these huge rounds. That's typically what catches headlines. I know definitely in a newsroom, that's the kind of thing. The bigger the number you can put in a headline, the better,
Yep.
right? From editors. So, imagine if we're swapping out VCs who are like not, who are like, I'm good now, on the press, swapping that out with community banks. I give kudos to the fintech snark Ron for kind of bringing this to light, because what if this is how we're reporting about the future funding of the industry moving forward? What a turn of events. Didn't see it coming.
Right. Indeed. Okay, moving on. We're going to talk about regulation, because this was interesting. Just saw this out of CoinDesk this morning.
Always the hottest topic.
Yeah. Well,
I love regulation.
It's important. We all need to pay attention to it. So, we have a new Congress, as we know, and that means in the House anyway, new committee chairmans and new agendas. And this was on CoinDesk TV this morning, where they interviewed French Hill, who is a Republican from Arkansas, who was chair of the House Subcommittee on Digital Assets, Financial Technology, and Inclusion. And they asked him what his top priority was, and he basically said, there was stablecoins is right at the top of the list. They're going to be using the draft that Maxine Waters and Patrick Henry created in the last Congress. It never actually went anywhere, and hopefully, they got 2 years. Maybe we'll see something. And it seems like they're pretty keen to get some movement here.
I'll believe it when I see it.
Mm.
I mean, at the very least, let's just hope that those in Congress are starting to get a better understanding of what some of this stuff means. Especially as things get more as things get more complicated and more nuanced. I mean, I'm just hopeful that there's some level of education going on. Do I expect anything? No. Hopefully they surprise us, and we're all talking about some bill that was passed. I do think there is a little bit of pressure on them from the Fed, and from the Fed now payment system to do something related to real-time settlement and inject that into the system. Whether or not they'll actually get this over the line is a total crapshoot.
Mm-hmm. Yeah, agree with you there. But I will say there is something to, the stable coin element. I mean, I believe this article called it the low hanging fruit, which in a sense, it sometimes feels like stable coins maybe should have been the first thing, to have really gotten that type of kind of traction, or even like media attention, or just mainstream attention that Bitcoin, had. But I agree. It's kind of we'll believe it when we see it. The fact that they're like talking about it already is kind of cool. We don't typically see regulation move fast, so we'll just kind of have to see how it goes. But the fact that it's on their radar, and I appreciate crypto and stable coins really for the underlying blockchain technology, and it's inherent mission of global financial inclusion. So if they wanted, to work on regulations that move the needle on that, then I hope to see it.
Yeah, I hope so too. Well, I actually think there will be something. Certainly passing the House. I don't know whether we can get it signed into law. Hopefully we will be, but I think we're going to see stuff out of the House. I'm pretty confident about that.
From your lips to their ears, Peter.
Okay.
Speak it into existence.
Indeed. Okay, so now we come to the part of the show where we do our regular now. It's weekly layoffs talk. Everyone's doing layoffs. Gemini, the crypto platform, which is in some trouble with they have their earn product where you can earn interest on your crypto. I'm a customer, unfortunately, in that, and that's all been frozen. They announced another round of layoffs. 10% of their staff gone. Third round in the last 8 months. The Winklevi were commenting about it, saying that the conditions continue to deteriorate in the crypto space. Yes, that's probably true. And the non-crypto layoffs, because we always have those as well. Bolt is laying off 10% of its workforce. They've lost 50% of the staff since May of last year. Dark times if you have a job in a fintech company.
Yes and no. Because remember, we talked about last week, and I don't think we have any data on this, but net pre-COVID, hiring in fintechs to today, we're probably still positive. Because we had that crazy hiring cycle after all that money flushed into the system in 2021, and ultimately now is being out of the system in 22 and into 23. So but yeah, I mean, anyone losing their job is obviously not good, but I still think overall fintech is ahead. This is kind of just a reaction to where we are economically.
Right. Well, and it ends up being the inherent consequence, if you will, right, to all of the capital that flooded in, right? And this is kind of this is what ends up happening, especially when inflation, rising interest rates, and all the things, right? So now we're seeing the repercussions of what that wonderful time was. Remember how wonderful it was when everyone was getting jobs and everyone was making a lot of money, and it turned so fast. But it also feels a little bit like this. Gosh, and peace and love crypto community. I feel like there is almost like a cleanse-ish,
right.
From FTX. And I, definitely am not happy about anyone ever losing their jobs. But, the other side to that is the opportunity to, right, go into other industries or maybe find other places that you enjoy working at, and maybe almost rebuilding the crypto force in a way, to kind of take us to that next level. Sometimes it takes a cleanse of sorts, so that we can reach that next level of progress. And I do feel like before all of the crypto winter and the FTX fallout, it felt like the industry was a little stagnant. And the narrative was just far too polarizing to really take us to that next level. So
the one thing I actually spoke with a prominent VC today, and he said that there's almost pressure on not really talking crypto specifically, but fintech more generally. There's pressure on CEOs to do layoffs whether they need to or not.
And
just like there was pressure in 21 when they got the checks to hire a shit ton of people.
What's that?
And so now it's coming back and saying, oh, here's the check. Now you have to reach this valuation, so go hire 100 people. Now today it's, well, you're not getting this check, so you got to cut your staff by 20% so you can reach these numbers and then hopefully get a check in late 23, 24.
Right. Anyway, I'm determined to end on some good news. So
go for it,
there was an article in American Banker. We're nowhere else out of time, but deposits are going up as far as interest rates on deposits. I specifically mean 20% of banks are now paying 2% or more. My fintech bank pays me 3.75. So, get with the program, traditional banks. And 36% of banks have increased rates on all of their deposits. So it's good. It's good news for savers finally.
Perfect way to end.
All right.
glad
Savers.
I'm a saver. Yeah. I'm glad I didn't get too crazy on that peer pressure all my friends at the bars were telling me about crypto.
Right,
It's
exactly.
like a small amount, but I was like, but my savings, guys.
Yes. Keep those savings, people.
Ooh.
That's important.
Yes.
Anyway, we'll have to close it there. Thank you, Nicole. Great to have you on. Thank you, Todd, as
Thanks,
always.
Nicole.
And thank you, of course, to the listeners and the viewers. Appreciate your attention. We'll be back same time next week for another week of FinTech news.
With an old friend next week.
Yes, and until then, we will see you later. Have a great weekend, everybody. Bye.
Bye.
Bye.